There is a new leader for the best performing income ETF in 2025. Hi, my name is Spencer, and I talk all about dividend investing and maybe some growth sprinkled in there as well through ETFs. And in this video, I'm going to be showcasing an ETF that you probably don't even know the ticker of and are not familiar with that is now our best performer on the year. I'm really excited to showcase this one. I have not talked about it specifically on the channel before, so I think you may be surprised. Before we get into the video, don't forget, if you're interested in dividends and ETFs, to hit that like button and to subscribe so we can all grow our portfolios together. Let's roll that intro. We have seen a crazy couple of weeks in the market, and if you are new to investing, it might seem a little bit scary, but I do want to showcase that the market gives us a lot of opportunities. What we're looking at now isn't by any means a red market, a bear market, but we may have one coming in the future. So I wanted to showcase the return of a lot of these income ETFs, and I will be tracking them consistently, whether they go up or down, to see which ones are the best performers. Now we can see on this page, I just have the major indices. We have the NASDAQ, this S&P 500, we have the Russell 2000, and we have Bitcoin. And over the last month, we have seen quite a bit of red. We have the NASDAQ down 3.5%, SPY down almost 2%. We have the Russell down 4.5%, and Bitcoin has tanked down at 24.4%. Now, this does not signal that we are in a bear market. Who knows? They could all be rebounding by the time this video even goes live. But I do want to showcase that no matter what happens, there are always opportunities in the market. And since our last best performing income ETF is no longer in first place, let's take a look and see exactly what is. With the drop in the last couple of weeks for the market, we have seen QDVO now be the best performing monthly paying dividend ETF for the last year. Now, if you don't know, this is the Amplify CWP Growth and Income ETF, meaning you're getting some growth and some income. It yields roughly a 10% distribution rate, which is very solid, and you have some growth on top of that. There is one big risk with this ETF, however, that I want to discuss when we look at the holdings. Now, we can also see the net assets are large, 440 million. It's got 57 holdings and an expense ratio of 0.55%. And they do specify right on the front, it's growth and high income potential. Now, when we have high income potential, they're talking about roughly what, 8 to 12%. They're not talking about the YieldMax 50 to 100% distribution rates. So this is a lot more consistent, and that's what we're going to want to see as we see a potential red market. Now, I'm definitely not saying we're going into a red market. Again, not financial advice whatsoever. I'm not trying to predict anything. I'm just showcasing that we did see a pullback in the market and that pushed QDVO to first place, which is phenomenal for this fund. So if you want to look at the website, I recommend it. I haven't talked about Amplify funds too much, and it's definitely time because some of these are doing very, very well. We can see right here the yield 10% distribution rate monthly, which is very, very solid. It has all their pay dates and then their holdings. But to really showcase the holdings and my biggest fear with this ETF, let's jump into that page. My biggest fear is the NASDAQ is super heavy with AI-based and tech-based stocks. That's the fund, right? That's the goal. And QDVO with the Q at the front kind of showcases the fact that this is a more NASDAQ-based fund. And what I've seen in the past, depending on the markets, is the S&P 500 having 500 companies versus QDVO versus QQQ holding that NASDAQ 100 as the basis point is tough. In a good market, this thing does really well. But in a bad market, how would this hold up versus a more diversified fund like the S&P 500? We can see the holdings are pretty skewed as well. You're going to notice a theme here. We have NVIDIA at 10.7%, Apple at 10.5%, Microsoft at 8.3%, Apple at 6.6%, Amazon at 5.7%, Broadcom at 5.5%, Tesla at just under 4%, and Meta at just under 4%. So we can see of the top 8 holdings, what's in here? It's the Mag 7, the Magnificent 7, which is a very popular theme in this space. NVIDIA, Apple, Microsoft, Alphabet, Amazon, Tesla, and Meta. And it's not only in this ETF, it's a large portion of it. And then, of course, we have Avgo as well in that top 8 positions. So you start scrolling down, and now things get into the 1% range. But again, 57 holdings, but a large portion of it is in the Mag 7. And now I have traded through some scarier markets through the pandemic crash. And one thing that was strange was seeing a lot of things start to fall and then the big tech companies fall kind of at the very end. We've already seen this with things like Bitcoin. Bitcoin has tanked, which is separate from our market, of course, but we are seeing some pretty interesting pullbacks and a lot more fear in the market. And this is a scary thing. We are seeing extreme fear. 1 year ago, we were in the greed zone, and now we're at extreme fear at 6. And we jump to the timeline version. It's really interesting to see this pullback. This is where we were in April. Now, this is a very important point because in April, everybody was freaking out about a major pullback, and then it ran like crazy. So I'm not going to say that we are at the low. I'm not going to say that we are going to rebound because I genuinely don't know. And I don't think that a part-time retail investor is the guy everyone should go to try to predict the market, although some other YouTubers seem to think that they can predict the market, but it is what it is. Now, in the extreme fear zone, I have not started buying yet. I'm going to wait a little bit. I do think because we are so fearful right now, everyone might start buying, and we could see what's called a dead cat bounce. And what that is when everything seems like it's getting better, and then you have a even steeper fall after. But again, we don't know what's going to happen. The goal is to buy ETFs that you want at prices that you want. And that should be the goal for every investor, in my opinion. So now I want to show you guys what was our top performer until the last couple of weeks and how QDVO overtook it. I've thrown a lot of the popular funds I talk about here all the time. QDVO, of course, we have EGGY, we have TSPY, QQQI, SPYI, IWMI, ISPY, IQQQ, and BTCI. I threw in one Bitcoin fund to showcase it's been rough. Now we scroll down, we can see, I'm also using Seeking Alpha. And if you guys are interested in using this platform, you can use my link down below. Really phenomenal. I love it. I get it for free because I'm part of their, I can't remember, content creation group or something like that. So I don't pay the yearly fee. It is an expensive thing, I would say. It's not cheap by any means, but if you like the articles, it could be worth it for you. And I love it for showcasing these charts. When we look at the 1 year chart, we can see QDVO is still up 17%. EGGY is down to 8.25. TSPY is up 10%. QQQI is up 15, which is still very solid. It's a close second place. SPYI is up 11. IWMI is only up 3%. ISPY, IQQQ, and BTCI. So we have definitely seen a lot more from the NASDAQ this year than we have with the S&P 500 because of that tech explosion. And because of that, and because of the overinvestment of QDVO into the MAG 7, you can almost call this a MAG 7 ETF. You can kind of relate it to YMAG, to MAG Y, which has also been doing relatively well because of the holdings percentage. Now, it was not the top performer. Really, at any point, it was not the top performer. It was kind of always lagging behind at least one other ETF, and now it has overtaken. And what it overtook was EGGY or EGGY, which at one point was up 28.5% on the year, which is phenomenal. And now one thing that does scare me a bit about EGGY is the fact that in the last couple of weeks, since just October 29th, it's fallen from being positive 28% to only being positive 8%. You're looking at a near 20% drop with this ETF. In the same time frame, QDVO went from 23.5% to 17%. Still a drop, but it is holding up a lot better. Now, there's a number of reasons for that all are part of the different investment strategies for both of these funds, but it is still a little bit scary. And I do want to showcase our second place performer now is QQQI, which is another one of my absolute favorite income ETFs. Scrolling all the way, we have IQQQ in third place because the NASDAQ has been doing better. And I mean, it's just wild because EGGY is even under SPYI now and TSPY. So all that being said, people are going to probably start making content about how crazy it is in the market, about the drops that we are going to see. And I will talk about these ETFs all the way down and all the way back up. Markets fluctuate. It is what happens. So if you want to see up-to-date news on the best monthly paying and even weekly paying dividend ETFs, don't forget to like the video and to subscribe. And if you are fearful about blocks, about these Bitcoin ETFs, I want to showcase, I did an interview with David Nicholas, who is the manager of the portfolio for BLOX. So check that video out. It's really interesting what he says about Bitcoin and the overall market sentiment. Also, don't forget, again, like and subscribe, check that video out, and don't forget to spread some love today.